In the past, we've made multiple videos about the electric vehicle company Rivian. We've highlighted the company's poor financial performance. For example, throughout 2023, they lost approximately $45,000 for each vehicle they sold. In 2024, the company conducted a retooling of its Illinois factory. They claimed this would allow them to achieve positive gross profits by the end of the year. We were skeptical of this at the time, but sure enough, in the fourth quarter of last year, the company reported $110 million of automotive gross profits, or about $8,000 per vehicle sold. In this video, we'll analyze how Rivian was able to achieve positive gross profits. We'll also look at what this means for their mass market R2 vehicle, which is expected to begin deliveries in 2026. If you run any type of business, be it big or small, finding the right candidate isn't just another task. It's the key to your business's success. Whether you run a restaurant, a tech startup, or even a YouTube channel, the quality of your team makes all the difference. That's why this video is sponsored by ZipRecruiter, one of the world's best hire sites. The recruiting process used to be slow and tedious. You'd have to sift through mountains of applications from unqualified or disinterested candidates. This has all changed with ZipRecruiter. Their smart matching technology uses billions of data points to match candidates with the right job. As soon as you post your job, ZipRecruiter instantly sends it out to a network of millions of job seekers. Their matching technology scans thousands of resumes, identifies the best matches for your job, and invites them to apply right away. In fact, 4 out of 5 employers find a qualified candidate within the first day. Their easy-to-use dashboard helps you sort, review, and rate candidates. ZipRecruiter learns from your feedback in real time to help find more candidates you'll like. With ZipRecruiter, hiring quality candidates has never been easier, giving you more time to do what you do best, running and growing your business. And now you can try ZipRecruiter for free at ziprecruiter.com/WSM, link in the description below. And now back to the video. Rivian conducted its initial public offering in November of 2021, almost exactly at the peak of the pandemic-era EV bubble. On the first day of trading, they achieved an eye-popping valuation in excess of $100 billion. Since then, Rivian's stock price has declined more than 90%. The company's incurred operating losses since inception, and until very recently, they lost tens of thousands of dollars for each vehicle they sold. This chart shows Rivian's revenue and cost of goods sold for each car it sells. In the second quarter of 2024, they completed a retooling of their factory in Normal, Illinois. This allowed them to launch their second generation of their R1T and R1S cars. As part of the retooling, they renegotiated contracts with their suppliers to procure components at lower prices. They also redesigned parts of the cars to make them simpler and cheaper to assemble. The full benefits of the retooling weren't felt until the fourth quarter of 2024. Cost of goods sold, or COGS per vehicle, declined to $99,000. Revenue per vehicle sold increased to an all-time high of $107,000. So they made approximately $8,000 of gross profit per vehicle sold. The reduction in COGS is easy enough to understand, but what about the revenue per vehicle? Rivian sells its R1T pickup truck for a starting price of $70,000, and its R1S SUV has a starting price of $76,000. Their electric delivery vans start at $83,000, so how did they generate $107,000 of revenue per car sold? During the fourth quarter, Rivian sold 14,183 cars, and generated $1.52 billion of automotive revenue. Included in that revenue is $299 million from the sale of regulatory credits. Certain states, most notably California, require that a certain percentage of all automaker sales are either EVs or plug-in hybrids. If an automaker fails to sell the required number of EVs, they are subject to financial penalties. 100% of the vehicles Rivian sells are EVs. They are thus well above the requirement, so they have a bunch of EV credits left over. They sell these excess credits to legacy automakers who don't sell enough EVs to meet the requirement. For certain administrative reasons, the vast majority of these regulatory credit sales happen at the end of the year. During the full year of 2024, Rivian generated $325 million from the sale of regulatory credits. Of that, $299 million, or more than 90%, was recognized in the fourth quarter. During the fourth quarter, it cost Rivian approximately $99,000 to build each car. They sold each car for $86,000. The $299 million of regulatory credits they sold in the fourth quarter represents $21,000 per car. The only reason they were profitable was the regulatory credits. Regulatory credit sales are a real revenue stream that will continue going forward. But given that the regulatory credit revenue over-indexes to the fourth quarter gross profit is abnormally high. If we divide Rivian's regulatory credit revenue for the entire year of 2024 by its total vehicle sales, we get about $6,000 per vehicle sold. The average selling price of Rivian's vehicles is $86,000. If we add the $6,000 of normalized regulatory credit sales, that brings the normalized revenue per vehicle up to $92,000. This is still below their production cost of $99,000. Rivian isn't really making a gross profit. The only reason they reported a positive gross profit in the fourth quarter is due to the timing of regulatory credit sales. By retooling their factory and renegotiating supplier contracts, Rivian indeed achieved a significant cost reduction. They reduced their production costs from approximately $120,000 per car down to about $100,000, but this is still well above the average selling price. In 2025, Rivian plans to sell between 46,000 and 51,000 vehicles. The midpoint of that guidance is 47,500. That represents an 8% reduction compared to the 51,500 vehicles they delivered in 2024. They are limiting production in anticipation of weak demand. Specifically, the company blames the recent wildfires in California for hurting demand, as California is their biggest market. Despite having fewer deliveries in 2025, they still expect to make a modestly positive gross profit for this year. So how is this possible? In 2024, Rivian signed a strategic investment deal with the Volkswagen Group, and the two companies agreed to form a joint venture. Volkswagen has long struggled with software and electrical architecture. Rivian's in-car software is widely considered to be world-class. As part of the joint venture, Volkswagen received a license to use much of Rivian's intellectual property. The two companies will work together to build new software and electrical architecture. Volkswagen will use Rivian software and other IP to build its Scout brand of electric SUVs and pickup trucks, which they plan to release in 2026. These cars will be direct competitors to Rivian. As part of the deal, Volkswagen will invest up to $5.8 billion into Rivian in the joint venture over the course of 4 years. In 2024, Rivian received $2.32 billion from Volkswagen, which came in the form of a convertible note as well as a cash payment related to the formation of the joint venture. In 2025, Rivian will receive a $1 billion equity investment from Volkswagen, but this is conditional on them achieving 2 quarters of gross profits. In 2026, they'll get another $2 billion in the form of equity and loans. Finally, once Volkswagen releases its Scout vehicles, they'll make another equity investment at a massive premium. Of the $5.8 billion Volkswagen will pay to Rivian, approximately $3.8 billion are classified as investments, while $2 billion are classified as revenue. To earn this revenue, Rivian has a single performance obligation. That is to help Volkswagen develop its Scout electric vehicles, and possibly other VW vehicles that the joint venture will work on. Over the next few years, Rivian will incrementally recognize parts of this revenue as the joint venture makes progress. This is expected to be a very high margin revenue stream for Rivian. They just have to supply some of their engineers and technical expertise to the joint venture, and they get $2 billion in return. Rivian expects to incur gross losses on its own vehicles in 2025. This will be offset by positive gross profits from the joint venture. Adding these two together, they expect to report a modestly positive gross profit on a consolidated basis. On a corporate level, Rivian is still a cash incinerator. In 2024, they incurred an operating loss of almost $5 billion. Their rapacious need for cash is why they agreed to the strategic investment from Volkswagen. They need the money. To unlock the next tranche of funding, Rivian needs to achieve 2 consecutive quarters of gross profit, and gross profit of at least $50 million for 2 quarters. For the latter condition, the 2 quarters need not be consecutive. Importantly, these gross profit requirements are to exclude the impact of the joint venture. They need to make gross profits from their core business of selling cars. Rivian has never really made a gross profit in their core business. As we explained earlier, the positive gross profit in the fourth quarter was purely the result of the lopsided timing of regulatory credit sales. You could call it an accounting technicality. Given that the factory retooling is already complete, there's no reason to believe that gross margins should improve going forward. If anything, they might get worse, as Rivian is cutting production in 2025 due to weak demand. This will likely result in lower fixed cost absorption and larger gross losses. One of the main problems Rivian has faced is insufficient demand for its cars. Their current R1 cars start at $70,000, which is too expensive for most people to afford. To reach high volumes of production, they need to release cheaper models. In 2026, Rivian plans to begin selling its new R2 vehicle, which is expected to have a starting price of $45,000. The company is currently in the process of expanding its factory in Normal, Illinois to make room for production of the R2. Rivian claims that the cost to produce each R2 will be about half the cost of the R1. This is due to its smaller size, simplified body structure, fewer parts, and new manufacturing techniques. Currently, the R1 costs about $100,000 to build, so the R2 will supposedly cost $50,000 to build. The starting price of the R2 is expected to be $45,000, but there will be various trims and options that can push the price up. Let's assume that the average selling price for the R2 is $50,000. Finally, Rivian makes about $6,000 of regulatory credits for each car it sells. If we believe Rivian's guidance, which is a big if, they could conceivably make a modest gross profit for each R2 they sell. At a corporate level, Rivian incurs approximately $3.5 billion of operating expenses per year. To break even, they need to generate gross profits of at least $3.5 billion. If they make $6,000 of gross profit for each R2, they would need to sell almost 600,000 of them per year to break even. Rivian is currently expanding its factory to achieve a maximum production capacity of 215,000 cars per year. This is well below the volume they need to break even. But even assuming they build new factories and make 600,000 R2s per year, would they even be able to sell them? Rivian currently only sells its cars in the United States and Canada, with the vast majority of sales coming from the United States. Currently, the Tesla Model Y is the best-selling EV in the United States by a wide margin. In 2024, it sold a little less than 400,000 units domestically. To break even, Rivian would need the R2 to be more successful than the Model Y, which seems a bit far-fetched. Additionally, the R2 will be competing directly with the Volkswagen Scout, which Rivian is helping to develop. This competition will further decrease demand. Caveats aside, Rivian's positive gross profit in the recent quarter is indeed an accomplishment, but the company is still very far from creating a profitable and sustainable business. It's unclear when or if this can ever happen. Alright guys, that wraps it up for this video. What do you think about Rivian? Let us know in the comments section below. As always, thank you so much for watching and we'll see you in the next one. Wall Street Millennial, signing out.